Welcome to my channel, Balance Sheets Matter. In this video, I'm going to do a stock analysis on Palantir, and this is going to be a comparative stock analysis. I know Palantir is the biggest AI hype. There's a lot of retail investors interested, and I'm going to see is the value right now, is it really a good point to buy it? Even with these high growth expectations, is it really a good stock to buy? So I'm going to do this by doing a comparative analysis to Salesforce, because both of these, regardless if it's AI or what, are essentially software companies that are business to business. And Salesforce is one of those stocks you would hope that Palantir would actually perform like. Because basically back when Salesforce had similar sales to Palantir, it was way back here when it was $29, and this is ripped up to $221, which from this point here to this point here has been a 20% annual compounded growth rate in stock price. Maybe the fair value is a little bit more up here for Salesforce since it's a little bit lower in the trend, which would give it about a 25% compounded annual growth rate in the stock, and that's met about the same revenue growth that Salesforce has got as well. So let's dive into Palantir stock here. There's not much financial history on it, but basically the key points I want to point out right now, their last 12 months of sales, they just did over $2 billion of sales, and they had a 79% gross margin. So let's take a look at Salesforce here, and let's find a similar point of time, which I've already pointed out is about 2012. So you can see here, back in 2012, sales were actually a little bit higher, 2.267, and they also had a gross margin of about 79%. And you can see their stock growth, their revenue growth here basically was great. This is actually at the early, it was a little bit above 25%, closer to 30, and then it tapered out and has been getting a little bit slower. But over the last 12 years, it's pretty much averaged about this 25% revenue growth rate per year. So for most Palantir stockholders, these are the very bullish assumptions they're hoping for Palantir. If this is Palantir sitting right now, you really hope their revenue grows like this, and that's what the stock will be. But the big thing, what about the valuation? So we can see back here when they were doing about 2.2 billion, this is Salesforce, this is about here, probably a fair value for the stock, maybe about $29 here. And we can go down and we're going to look at what their market cap is. So basically their market cap back in 2012 was only 16 billion, and now it's grown to about 215, maybe a fair value for it is closer to 300. Now, what is Palantir at? Well, Palantir's double the market cap that Salesforce was at that time, at $32 billion. So this is one reason I think Palantir is overvalued, even in very bullish assumptions. If these most bullish assumptions of, for the next basically 12 years, 25% annual compounded basically revenue growth does happen, yeah, Palantir will grow. You probably would get a positive stock return, but I think the stock is 50% overvalued even with bullish assumptions, basically meaning in those assumptions the stock should be about maybe about 750, because well, you still actually would probably get about a 17% return. That's pretty much in line with what the QQQ would probably return. So for all this extra risk of taking a growth stock, you aren't really getting rewarded for the return for your risk that you're taking for investing in an individual stock. If a stock is expected to grow at 25% per year, you probably want a 25% kind of like compounded growth for it as well. So I think the stock is overvalued. Let's go to the chart over here for it. And right now, I think their last quarter was only 13%. So if they're achieving under 25%, the stock's probably even worth less, which may even mean $5-6. And there is an inverted yield curve. And this is a little technical analysis. You can see kind of basically when they first did their little launch there, they got up, they came down, making a lower low. Now they've made a higher low. This is a bearish trend. I personally think with, like I was saying, the inverted yield curve that's coming up, there's going to be potentially a little bit of market weakness over the coming years. Maybe it's a few years in the future, which probably in the short term is going to mean lower growth for Palantir, as businesses aren't going to want to invest as much in Palantir. So this may actually, in my opinion, may lead the stock to drop below $5. At this point, I would want to re-examine it. This might be a great buy for it at this point, but at the current point right now, investing at $15 with really bullish assumptions, well, I would need it for $7.50 minimum in the most bullish assumptions. So I hope you liked this video, saw how it is a little bit comparative analysis. We don't really need to do too deep of a dive. This is just 100-foot view to see if it's even in the ballpark of being a good value. I don't think it is. You can see why the stock supported back here, because doing this type of analysis, coming to 750, you can see there is some value there. But if there is a little bit slower growth going forward, I definitely think the stock should be cheaper. I would not be buying it now. I would probably be selling it and waiting for a better price to buy in. So remember to like, share, and subscribe to this video. I do a lot of other good stock analyses and basically try to find stocks that are going to outperform the market. This is what my channel is all about. So like, share, and subscribe, and I'll see you in the next video.